Will exploding federal deficits spark a financial crisis to rival 2008? Will we be eating cat food again? Last week, two influential mainstreamers, Ray Dalio and Jamie Dimon, warned a financial crisis is coming now that federal deficits are projected at nearly $3 trillion per year for the next decade, courtesy of Republicans in Congress. For perspective, before COVID, $1 trillion was a crazy number on the deficit. Before the 2008 crisis, it was $500 billion that got the headlines under W. We thought that was bad. The first warning came from Dalio, founder of the world's largest hedge fund, Bridgewater. He warned of a, quote, breakdown in bond markets as roughly $10 trillion of federal debt looks for buyers this year. When there's not enough buyers, it drives down bond prices, which automatically drives up interest rates and incidentally crashes banks, which we saw in 2023, when interest rates rose thanks to the Fed. Now, that all drives up the cost of borrowing in the entire economy, strangling businesses and driving up mortgages, credit cards, and car loans, which squeezes consumers and historically leads to recessions. And the only way to head that off is for the Fed to jump in and, quote, print money. As in, the Fed fires up their basement computers, types a bunch of zeros on an Excel sheet, and uses those counterfeit dollars to buy trillions of dollars in bonds. The official term for this is quantitative easing, which sounds better than counterfeiting. So in short, either they let rates cause a recession or they let inflation rip. The solution, of course, is don't pump out so much debt into bond markets. That's currently overwhelmingly a government thing. Roughly 80% of debt issuance in the entire American economy is the federal government. The rest of us make do with crumbs. The other warning came from Jamie Dimon, the CEO of J.P. Morgan Chase, the world's biggest bank. He thinks federal deficits are now so big we are, quote, going to see a crack in bond markets that will send governments into, quote, panic. Panic here meaning trillion-dollar bailouts. Now, Dimon, of course, knows his bailouts. He was one of the lead architects of the trillions Wall Street got in 2008, as well as the autopilot bailouts in 2023 that had Janet Yellen cover $20 trillion in bank deposits. With just $100 billion at the FDIC, that is a 2% cover, par for the course for the feds. The difference is back then, Dimon was not warning. He was busy counting J.P. Morgan profits on the subprime loan crisis. Today, he is telling us it's coming, adding if there's a crisis, quote, Chase will make more money. People will probably say we caused it. We like crisis, but if we don't change the trajectory of federal debt, it is coming. So this is not Peter Schiff or skies falling perma-bears. These are two of the most establishment players warning of a coming crisis. So what's next? Brought to you by Unchained.com. With congressional Republicans giving up on spending cuts, making a mockery of Doge, there is nobody flying the plane. Perhaps the best we can hope for is to root for that bond market crack, as bond investors, so-called bond vigilantes, demand higher and higher rates, forcing Washington to face the consequences of its spending, the recession or inflation it takes to finally cut that spending. Unfortunately, as always, voters will also be facing those consequences. Okay, we'll be watching. See you next time.